The broadcast is now starting. All attendees are in listen-only mode.
Well, good afternoon, everyone, and thank you for joining us on the Assurity Disability webinar today. My name is Christy Saul, and I am Vice President of Marketing for URL's Health Options Specialty Products Division, and I think I want to change my title because it's such a mouthful. But essentially what I handle at URL are products such as disability, which we're going to be covering today, cancer, critical illness, individual accident, hospital indemnity, and accident plans, just to name a few. So essentially, I kind of handle all the products on the individual side outside of the ACA. And I do like to say that you can sell the products that I handle all year long and actually make money, unlike probably some of you, I'm sure, are feeling the burn from cut commissions with all the different carriers. I'm going to show you our website really quick. I'm not going to spend a ton of time on it because I do want to get to the presentation. But these are all our different departments here. So you can see we market hundreds of different carriers, respected carriers in the industry, such as Assurity, which we'll be covering their disability products today. And we do everything but property and casualty. So I just wanted to show you really quick, if you would go to our website and click on the health options and product information, and then we would come down here, and here's where you would find the Assurity information. And there's tons of information on our website, from product guides, marketing materials. There's recorded webinars down here as well. So that's where you can find more information on Assurity's products. I do have, again, I'm not going to spend too much time basically on my intro, but you can go to our website and call me later. My direct extension is 131. On the webinar today, we have Todd Shield, who is the Manager of Disability Income Products with Assurity, and he will be giving the presentations. And I know he's got a lot of great information and sales idea to go over with you today. I would render a guess, and I could be wrong, that most of you on the call today don't make a living by selling disability income products to your clients. But I do urge all of you to consider adding this to your portfolio. And we are here to help you. If you've never sold it before, we can run the quotes for you, walk you through it, even talk to your clients if need be. Health insurance and life insurance, home and car, they're all very important and vital. But if your client becomes sick or hurt and can't work and earn an income, how are they going to pay for all those premiums? And I could be off, but the latest statistic I heard, and I know it's higher now, is that 50% of all home foreclosures and bankruptcies are due to disability or critical illness and the medical bills that are associated with them. Now, only 2% are caused by death. And the overwhelming majority of these people have health insurance. So again, you need to protect your clients, their most valuable asset, which is their income. So I'm going to stop rambling because I'm not the presenter today. We do have everybody muted, but there is an area where you can type in questions later. We will get to all your questions at the end of the presentation. So without further delay, I'm going to hand it over to Todd.
Thank you. And as I pull this up here, I appreciate everybody's the opportunity to do this. I appreciate everybody's time to be on the webinar today. Let's talk a little bit about why we need to be offering income protection to our clients. Limerick did this study, and it was a few years ago, but I still think that it holds a lot of weight, of people that actually purchase life insurance. And of those people, only 18% could remember their agent or advisor talking about income protection to them. Now, 18% probably doesn't sound like a lot, but I think that number might be high. And I say that because Limmer did another study and said that only 52% of agents actually own a policy on themselves. So if you haven't sold a policy to yourself, I'm almost guarantee that you're not talking about it with your clients. And if you're not talking about it with your clients, as Christy stated, it's a shame because we are leaving all sorts of money on the table that's out there. So own one on yourself, and I promise that you're going to find success. I want to show you the market opportunity that's out there for income protection. This study was done for us by Munich, who is one of our reinsurers. And what we see are the columns in green are the number of people in millions for that stated category. And the columns in blue are the percentage of those people that actually own a disability policy. So on the far left, you can see, relatively speaking, there are not that many doctors and dentists within the United States. But just about 80% of those people actually own a disability policy. And I always have to pose the question, well, why? And I hear all sorts of different answers. Well, they see it all the time. They have high income. Why I don't disagree with that, it's even more simple than that. Somebody has went out and spoke to them about the importance of protecting their income. And guess what they go out and do? They go out and they buy. But on the far right, Middle America, this is a surety's target market. I'll show you that we're not uncomfortable stepping outside of this red circle here in a moment. But this is our target market. We've got over 100 million people in the United States out there that have very little or no income protection whatsoever. So what I'm getting at is your prospects are virtually unlimited. Everybody you talk to out there is really going to be a prospect for income protection. So the question is, what do you sell? Christy already talked about this earlier. It doesn't matter what you sell. Everything that we do and everything that our clients do is a function of our income. And, if you sell a lot of life insurance, how long would they be able to pay for that? I run into tons of people throughout the country that are focusing on retirement and assets under management. How long could those things actually be funded if their income gets shut down? Everything we do revolves around our income. So we need to protect the thing that makes it possible. Our income is truly our most valuable asset, and we protect all sorts of things. People are out there buying $10 a month of coverage on their cell phone to insure their cell phone, but we're not protecting our paycheck. At the end of the day, it just doesn't make much sense. We need to talk to our clients about protecting their income. The other thing that clients don't realize is that disabilities really play no favorites. If you ask a client right now how they may become disabled, I guarantee they're going to tell you it's going to be because of injury or accident. Well, as you can see at the very bottom of the screen there, injuries and poisonings, for whatever reason, the Council for Disability Awareness decided to put those two together. Those only account for 9% of all disabilities. The other 90% are technically illness-related disabilities. So when we think about it, injuries and accidents only account for 10% of all disabilities. They need to understand these things that keep us out of work. Musculoskeletal, those are your bad backs, bad knees, things that happen over the course of time, not necessarily things that are instantaneous, repetitive motions. You can see cancer is number 2, and I think this changed just a little bit. Mental nervous disorders are actually number 3 now. Depression, anxiety, these type of things can really keep people from going to work. So it's not about necessarily the injuries and the accidents as it is about covering the illness-related types of disabilities. So the question I get is, well, what does it take to be a successful producer? You need to have conviction and ask the right questions. A big one is presenting the right solutions, but I think the biggest one, honestly, is right here, managing the expectation of the client. You have to understand the underwriting process and know product changes and sales opportunities. I can tell you right now that URL and Assurity Life can do every one of these things for you except give you conviction. So what does it take to have conviction? Well, believe in the product. Know what it can do, okay? Know that if your clients are too sick or hooked to go to work, they've got a stream of income, tax-free, that's going to help them pay all their bills. Again, own a disability policy on yourself. I find agents that sell disability policies, have one on themselves, they are so successful. I actually have an agent that takes her policy with her and sets it on the table when she's doing a client presentation to say, listen, I'm not just peddling you another product. I believe in this so much that I own one on myself, and if you want to take a look at my policy, you're more than welcome to. We all know that no insurance policy out there can be sold on stats. We know everybody's going to die, right? But does that mean everybody has life insurance? Not even close. You have to have a story to tell. And if you don't have a story of your own, go out to protectyourpaycheck.org. This is the Life Happens microsite for disability, and it's a fantastic website that has a lot of videos that are out there, free to download, free to use. If you don't have your own story, I recommend that you go take a look at some of those. I also want you to set a goal and be committed to that goal. Nobody that I've ever run into has placed 100% of their fully underwritten policies, but it's also not expected. But too often in the disability world, we hear, it's too tough, underwriting's too difficult. If you follow the process and you understand what you're looking for and you're doing proper pre-screens for your clients, you will find success. So I want you to set that goal and be committed to your goal and don't give up. So speaking of pre-screening your clients, this is going to be your key to taking the headaches out of the underwriting process, okay? And I know this is very hard to read on your screen, and that's okay. But when we talk about underwriting, there's really 3 tiers to the underwriting process. There's occupational, financial, and health. So guess what we go through? We ask about their job duties. Not necessarily what their title is. We want to know what your client's doing on a daily basis and how much time they spend doing that. That'll help us get the occupation class correct the first time. If we get it wrong, it does create dramatic differences in premium, and that's never a fun conversation to have with a client if it happens to go the wrong way and their premium gets more expensive. Then we ask, ballpark figures. How are you earning your income, and how much are you earning? Because our golden rule in disability underwriting is that if you're a W-2 employee, we use your gross income. If you're 1099 or self-employed, then we use your net income. Again, we want to make sure we get this right. That way we're not telling a client that they could potentially get $5,000 worth of coverage and underwriting gets involved, and now we may only offer $3,000. All right? So, again, we want to get it right the first time. And then the rest are some generic health questions. And these aren't necessarily all knockout questions, but these are things that will definitely hold up a policy in the underwriting process. If you sell a lot of life insurance, I can almost guarantee that your life underwriter could care less if your client sees a chiropractor. But to a disability underwriter, that's a very big thing. A bad back isn't going to kill you, but a bad back sure could keep you from going to work. Now, I would tell you that this thing only takes 3 to 5 minutes to fill out. And on top of that, if you fill this out and send it in, we'll even put the illustration together for you. I know URL can help you out with all this information too, but we'll do all the heavy lifting for you. The last thing that I'll mention on this page is that if we've actually tracked the agents that use it, and agents that are using this versus agents that don't are placing 20% more of their cases. That's a very, very big deal. So my question to you is, would you take 3 to 5 minutes of your time to be able to place an average of 20% more of your cases? Absolutely. So think about this illustration checklist, and I know Christy's got access to this, and we can even send it to you if need be. The other tool that we have available for you is our DI Game, which is a quick needs analysis tool. Game is groceries, auto, mortgage, and electricity, really being all utilities, if you will. And when we put actual numbers by these things, it makes it real for the client. All right, no different than a life needs analysis or any other needs analysis that you may have. We as Americans aren't very good about budgeting our money, first of all, and we're paying for these things, and we don't really realize how much we're spending on them. Put a number by this, make it real, and say, at a minimum, this is the amount that you need. And if we can afford to cover more based upon what you've got going on in your particular situation, let's do that. But at a minimum, these things need to be covered. And again, people who use this are very successful. It's a great way to break the ice with a client. I want to talk to you quickly about Century Plus, which is our fully underwritten disability policy. It is offered ages 18 to 60, and we use age nearest rates, so date of birth is important to us. We only use 4 occupation classes. Some carriers use more than that. We decided to keep it pretty simple, and we used 4 occupation classes. Based upon that occupation class, they can get maximum benefit amounts between $8,000 and $15,000. Now, I told you a little bit ago that we really focus on middle America, right? But when we look at benefit amounts up to $15,000, at least where we're at here in Lincoln, Nebraska, that's no longer middle income. It would take $370,000 of income to max out our contract. So I'm going to venture to say that the majority of your clients could be covered by our policy. Also, based upon those occupation classes, we could offer benefit periods of 1, 2, 5, or 10 years, even age 65 or age 67. So we've got a wide range of benefit periods that are out there. And our elimination periods are pretty standard throughout the industry. Now, quickly, I'll tell you from a sweet spot standpoint. From an elimination period standpoint there, we offer about 70% of our policies are sold with that 90-day elimination period on them. It's really the industry standard for long-term disability. And from a benefit period sweet spot, I will tell you about 35% of our policies are sold with a 5-year benefit plan. Another 35% are sold with an age 65, and about 10% are sold with that 10-year benefit plan. Now, you may be thinking to yourself here a little bit, well, 5 years for a benefit period doesn't sound long enough for my clients. I will tell you, as an industry, we know that an average disability lasts about 2.5 years. So even with a 5-year benefit period, you're still covering by far the vast majority of disabilities that will occur. Last bullet point on here is that our policy is set up on a guaranteed renewable chassis. Now, unlike long-term care, we don't go back every 2 years and start asking for rate increases, all right? we have figured out this pricing, and we've actually been doing this for 125 years. And for the policies that we've underwritten and individually priced, we have had one rate increase on a small block of business within the state of California only. That's it, all right? So I will tell you that I can't compliantly sit here and say that we're never going to increase rates, but I can tell you that I'm very confident that your client will have a level premium through age 65. The other thing that sets us apart a little bit is our definition of disability. And this comes with every contract, no matter which occupation class they fit in. For the first 2 years, they have a true own occupation definition of disability. So in layman's terms, this says, it's as easy as saying this to your client, listen, if you can't do what you do on a daily basis, you're done, your claim begins. Your clients may ask you all the time, well, hypotheticals, what about this, what about that, what about this? It's really as simple as telling them, if that happens and you can't perform your job duties, you're done, your claim is going to get paid. If that happens to you and you can still work, then the claim is not going to be paid because you can still work. So where we find this definition of disability, really it falls into the affluent market, doctors, dentists, we're really matching their definition of disability. The other thing that I will mention is, and this is the difference maker with it, is that we will allow the client to stay on claim and earn an income doing something different, all right? Where other carriers state that you cannot stay on claim and earn money at all. We say we don't care. If you can work outside of your normal occupation and earn money, you can stay on claim and keep that money. So that's a real differentiator for us. We have 10 riders on our policy, and we're not going to talk about all 10 of these today, but I just want to touch on the supplemental disability rider briefly for us. It's our most popular rider because it pays an additional benefit to the client. And in order for a client to achieve their maximum benefit, you have to include this on their policy to get there. But it can be offset by social insurance programs, which would be a federal Social Security TI claim. It would be workers' comp or a government or railroad disability benefit. Here's a quick example. $3,000 monthly benefit, $2,000 base, $1,000 in the supplemental rider. Claim begins, the surety starts paying out the $3,000. Social Security finally kicks in and it's going to pay $500 a month. So a surety pays the $2,000 base. We pay $500 of the SDIR. Social Security picks up the other $500, and the client still walks away with their $3,000. I like to tell clients that, listen, you are locking in this benefit, and you're never going to get less than this benefit that you see. It's just that it may come from multiple sources, and that's really an easy way to explain it to the client. And the other thing that I will talk about is this retroactive injury rider. I like including this on every illustration that I run, and basically it takes that base benefit. If they are disabled due to an injury or an accident, as soon as they satisfy their elimination period, it pays it back to day one. So in that example of a $2,000 base benefit, as I jump back here, $2,000 base benefit, 90-day elimination. I get injured, I miss my 90 days, a surety cuts me a check for my $2,000, times my 3-month waiting period, and I get a check for $6,000 of back pay, and then I start getting my full $3,000 moving forward. We talked a little bit about the underwriting process, and one of the things that we really focus on is our self-employed and small business owners. We do an occupational upgrade for them. 3 years as the owner, income of at least $30,000 net, and 10% ownership. Now, I'll tell you that every time we jump up an occupation class because of this, we're saving your client 25 to 35% on premiums alone. They can be eligible for riders that they weren't eligible for because of their occupation previously, and this is a very powerful program. What I like about it is that you as the agent don't even have to ask for it. If our underwriters see that your client has met the criteria, we'll automatically jump them up for you. Last thing that I'll talk about here, and then we'll open it up for some questions that you can type in, is why your clients, specifically small business owners and self-employed people, need to think about business overhead expense insurance. Those clients are in double trouble. And I say that because their one income funds two budgets, a business budget and a personal budget. And if we've only talked to them about protecting their personal income, how are they going to pay for all those business expenses? Things like salaries, employee benefits, rent, lease, or mortgage, anything that basically they're writing off on their tax return can be covered within a business overhead expense plan. It's a little bit different with a claim. It's actually a reimbursement. So they need to submit their expenses and we reimburse them to them. And it's like a pool of money because we know that expenses fluctuate from month to month. So there's going to be high months, there's going to be low months. So they've got a pool of money to be used, and when they use it, they use it. So there's carryover with that benefit as well. Here is the best part about business overhead expense, is that the premium is tax deductible as a business expense. Now, if you're aware of the tax laws, the government is going to say, well, hold on a moment. If you're deducting these premiums, any benefits paid to you through this policy would be considered taxable income. Well, that's okay too, because if a surety life has paid you, as an example, $50,000 of business overhead benefit, they've already shown $50,000 of tax write-offs. So $50,000 of expenses minus $50,000 of the write-offs, so they're going to cancel each other out. It's a wash at the end of the day. So the client really gets the best end of both worlds. They get to deduct their premiums on the front end, and there is no taxable consequence on the back end. I love this policy, and we need to talk to people about protecting both budgets if they're a small business owner or self-employed. Now, the last two things that I want to mention here is we have a couple stipulations for business overhead expense. The client can't be solely working from the home. An example would be an in-home daycare provider. Right? They never have to leave the home to do their business. So on a tax return, it's very difficult for us to see what's actual business expenses and what's personal expenses. But let's say that you've got a self-employed plumber, and he's using his garage as kind of his office, if you will. Obviously, that person would be leaving the home to make the money, so it would be okay because he's leaving the home to make that money. And if somebody does have a business, we ask that in order to get coverage, that they have to have 10 full-time employees or less. What underwriting wants to see is that if the business owner would be missing work, the business would actually suffer because of it. They're not just the money person behind the scenes. So a couple of ideas there for you. Last thing that I'll mention, I want to give you a couple quick sales ideas, and then we'll open it up for some questions. This works. It's an old one, but it's a good one. It's called Job A versus Job B. And this works with no matter what the actual income level is of the client. But as an example, I've got Job A for you. Job A pays you $75,000, and if you're sick or hurt, you get nothing. Or I can pay you Job B that pays you, say, $73,000, and if you're sick or hurt, it would pay you $50,000 tax-free. Which job would you take? Now, being that there's very little difference in there, everybody picks Job B. That's simply a disability premium deducted from from the actual salary, and they're properly protected. One of my favorite sales ideas is I have an agent that, and this is a way to hold yourself accountable, as kind of we talked about mentioning income protection and bringing it up on a regular basis. At her desk, she has taped a $5 bill to her desk with a note that says, if I don't talk to you about protecting your paycheck today, I owe you this $5. She's done a couple of things. Obviously, she's held herself accountable to bring it up. But she's also broken the ice with her client because they may not have come in for an income protection discussion initially. And the client knows that she's going to ask about it one way or the other. And so the ice has already been broken there, and it really eases that tension of talking about protecting someone's income. So I just wanted to give you a couple of quick sales ideas that you may be able to use. If you can implement them, that's great. Otherwise, we can have a further discussion about some other sales ideas and techniques that I've seen effective out there. Christy, I will turn it back over to you and
okay.
see if there are questions that have come in that I may be able to answer.
There's none that have come in so far, but I will wait a few minutes. But I did just want to mention, thank you very much. You did a great job. About asking the question and owning the policy yourself, I think it's really important, and I echo what you said because, as I said earlier, I know that at least the agents that work through URL, none of them are making a living just by selling disability insurance. They're selling
Right.
life, they're selling health, annuities, senior care. But those that are very successful in writing the disability on their clients do own it on themselves.
Yes,
So again, I think it's really, really important. And Jessica in my office and I, handle the individual disability, but I would have to say that I get at least 5 calls a week from agents who are very successful agents, writing health or life or, P&C, in a panic. And they said, I met with my client to deliver the life policy or, the health policy, help them through that. And they asked me about disability insurance.
Mm-hmm.
And the ones I know very well, I will say, why is your client asking you about protecting their income? You should be asking them. And
Yep.
I know it's, it's a fear of not knowing the product, maybe fear of the underwriting. But again, I'm going to reiterate the fact, if, ask the question of your clients. If you couldn't work for 3 months, 6 months, a year, how would you pay your bills?
Exactly.
And then call me and Jessica. As I said, we will walk you through it. We will
Yep.
run all the quotes for you. And going back to, sorry, I'm losing my voice here today. Going back to, the self-employed with certain criteria that they can bump up an occupation class. Jesse in my office, who assists me, and I know that. So if you come to me and say, okay, well, this guy's self-employed, I'm going to ask you, how long has he been self-employed? And a lot of times I get, well, he's making $250,000 a year. I said, is he really? What's he paying taxes on? So we kind of take that pre-screen away from
Yep.
you, because I might be a pain to you going back and forth and asking you a lot of questions, but I don't want to misquote it either. So I don't want to give you a quote assuming he makes $250,000, and assuming that he doesn't do any physical labor. So we're very, kind of nitpicky, but we want to get it right the first time here. So
Yep.
you can, again, trust on us to ask the right questions.
I couldn't agree with you more there.
Yeah, and the other thing, I love the mug idea, because, the other conversations I'll have a lot of times, and I'm sure the agent's having the conversation with his client, is, I'll get a call, well, run a 30-day to age 67 and run the max. So sometimes they're going to sell. They're going to sell to those doctors, those lawyers. But what I'm typically going to do is I'm going to run you the quote that you want, and then, like you said, where your dynamics are, I'm going to typically run a 90-day, 2-year, or 5-year, and put the retroactive rider on. So, we're going to send you something you can sell, and I'll also send you what they'll probably laugh at you and kick you out of the door with. So, okay, we have some questions coming in.
One of the things that I'll mention while you're looking at that question real quick, Christy, and you bring up an excellent point there, is cost. What consumers grossly overestimate what a disability policy costs, which is kind of what makes them timid about purchasing it anyway. So as we talked about setting the expectation with the client, our goal as an industry, not just Assurity Life, but as an industry, is to keep disability premiums between 1% and 3% of their income. So when you're talking to them about it, you can tell them that this really is an affordable policy. And the other thing that I'll mention is, why we shoot for 1% to 3%. I tell people all the time, listen, if $50 works for your budget at this time, we'll get you a $50 plan. If $75 works for your budget now, we'll get you a $75 plan. I'd rather have you have something than nothing at all. So we can make it work for any type of scenario out there.
Mm-hmm. Okay. And okay, we're having some questions coming in. First one, they're asking, if an insured has a 2-year policy and becomes totally disabled for a year and then able to go back to work, how does the policy work? And I can answer that, but I'll let you. You're the host.
If they've only used it for 1 year and they pick the policy, or they go back to work, the client, while they're on claim, they're never responsible for their premiums. There's waiver of premium built into the policy. They go back to work, they start paying their premiums again, and if they become disabled for that same reason or any other reason, they would have another 2 years of benefits payable for that particular disability that has happened to them again. So it's not 2 years and the policy totally terminates. In your scenario where you're asking about a 2-year benefit period, it's 2 years for every valid claim that the client may end up having.
Right. I think that's a misconception too, because it's not, okay, well, they paid for 2 years, my policy's gone. It's, anytime you would become disabled and couldn't work, the policy would pay out for 2 years.
Or they think that as soon as we pay 2 years that we're going to terminate their policy because they've maxed out their benefit. No, we've maxed out the benefit for that particular claim, but we know that there's millions of things that could keep somebody from going to work, so we'll pay out on those too if it happens.
Okay, next question is, what information do you need for the business overhead expense?
Business overhead expense, if you just get round numbers, one of the things we have, Christy, and you may be able to provide that to the listeners on the call today, is we've got on the back of our client brochure, we've got a list of the major things that can be covered within a business overhead policy. So the big ones, again, would be rent, lease, or mortgage, employees' salaries, interest on business loans, office equipment leases, those type of things. But in order to justify that, we will need a tax return, because the tax return is going to show exactly what you've been writing off. And in these scenarios, there's no reason to try to even potentially overinsure them, because it's a reimbursement plan. You're only going to get what you can prove. So we want to make sure that we get it right, and we're getting them an illustration for benefits they would actually end up using. So a tax return is going to be necessary for every BOE policy.
Okay. And actually they're priced, very reasonable. They're very more reasonable than an individual disability policy.
I can tell you right now.
I run the quote sometimes. I'm like, that's cheap.
Yeah, a 40-year-old male, 4A, which would be an insurance agent, $3,000 of benefit, a 30-day elimination, and a 2-year benefit period, which is the most expensive option, I think runs about $35 to $40 a month.
Mm-hmm.
So about $1 a day for $3,000 worth of benefit. That's very reasonable.
Yeah, no, I agree. And I don't see, and I think, again, if you're presenting to, a business owner, bring up the BOE as well, covering
Absolutely.
the business expenses.
Every time.
Yeah. And that just brings up just another, because I have my notes because I don't see any other questions coming in. Just, it boggles my mind, and I'll have to mention this because it doesn't boggle my mind, but newly self-employed individuals, I get those calls all the time too, where he just started his own business. I'm like, well, there's some things we can do for you, but not a whole lot.
Right.
You want to see 1 year of tax returns. I know Surety actually is the most lenient in that area for disability, where, and correct me if I'm wrong, if they were in the same W-2 line of business, then you'll offer some benefit, correct?
Correct, yeah. So what we do, as long as it was a similar occupation, let's say it was somebody working in the construction industry as an example, and they decide to go out and start their own contracting business, that would be similar occupations. Because they wouldn't have a full tax return under their belt when they start their own business, we would take half of their W-2 from their prior job and then base it off of that. So we'll at least give them something, and then that gives you as an agent an opportunity to go back after that tax return has been done and see if we can offer them additional benefit. Sometimes that first year is very hard, specifically when they're starting that new business, because there's so much stuff that they have to buy. But we can offer something to them. Okay, so as long as there's similar occupations, yes, we will make an offer in those scenarios.
Yeah, but I think people don't. I think people don't think about it until they become self-employed. A lot of times.
Exactly.
Yeah, so I get those calls a lot, and also, the younger you can sell somebody. I know, younger people think they're invincible, nothing's going to happen to them, but claims show otherwise. But again, I run quotes all day long, so. I see the quotes for a 25-year-old and 30-year-old, kind of young, healthy male, and I ran 6 today for 1099 employees that, all work in the same kind of industry, and 3 of them were, 55, one was 63. We couldn't run with a surety. And premiums are through the roof. So I think the older people they say, oh, I should really, think about protecting my income.
Yep.
And I'm telling you, if you can get them 25, 30 and talk to them about the need, you can even throw return a premium on, and they sell like crazy.
Yes,
but
they
you
do.
start getting into the 55, 56, 57, and I just shake my head and think, oh,
Yep.
This isn't going to sell.
At those younger ages, return a premium is so awesome, because they can literally get back every dollar they've paid into the policy, and it would still be minus any claims that we've paid out. So we are one of only 3 carriers left that offer return of premium as an option.
Mm-hmm. Absolutely. I don't see any other questions coming in. Just maybe some, and I'll just speak really quickly, and then I'll let you finish it up, Todd. But
Okay.
I know a lot of the, the questions you might ask your clients, and they say, well, I have disability at work. Well, 9 times out of 10, it's going to be short-term disability.
Yep.
The majority of times, bonuses aren't included in that. And the benefit that your client's going to get if it's employer paid is a taxable event. So at the end of the day, they're not really covered enough, probably at work. And, then everybody says the government's going to take care of me, Social Security, disability, and I'll tread lightly. And if I give you a wrong information, Todd, you can correct me. But I know the definition of disability through the government is you can't basically do any type of work, or your disability is going to be lifelong or end in death. And I think 70% of all applications are denied at first.
Yep, they sure are. And on top of that, when it comes down, I hate to just pick on the government all the time, especially with this whole Obamacare thing, and how it's affected us as an industry. But at the end of the day, when we have a government-run program, there are going to be issues. So not only on top of that is it super difficult to get on claim, but you guys may have read that the trust fund that runs the program is actually set to go bankrupt next year. So is this really something that our clients should be allowing themselves to rely on? The answer is no. An average claim is about $1,100 a month, an average claim, okay? So my question is, if you think you're going to tread lightly, how lightly can you tread on $13,000 a year? That you're not even treading lightly. You better be floating on air if you think that that's going to happen, because that won't even get people's mortgages paid. So the really only feasible option that your clients have is to have an income protection policy put in place. And what I like about this, as you talked about the group benefits, Christy, is that when those policies are also only as permanent as their employment. And we know how frequently people change employers. The next employer may not have benefits available to them. If you have an individual policy, you can go and do anything. Once it's set, we can't touch it. You're paying your premiums. You are entitled to that benefit if you can't perform your job duties. It's very simple. So it goes with you depending upon where you end up working even down the road.
Right. And I think, too, going back to Social Security disability, I think I had read a while back that because 70% of all initial claims are denied, a lot of people have to get attorneys to try to get their benefit, that I think the average time frame to get that first check is close to 2 years. And with most long-term disabilities lasting 3 years and under, they're kind of out of luck at that point.
Exactly. And then the attorney is going to take money off the top for you for helping you
get $1,100 a month,
right? So your $1,100 isn't $1,100 anymore. The other thing that I'll mention really quick, and then if there are any other questions or if we want to wrap it up, that's fine, Christy. But the other thing that we have available to you as agents are client-specific brochures. So if there's a target market that you want to go after, or that maybe you're already involved in, we've got about 30 occupation-specific brochures out there that range anywhere from nurses and dental hygienists to postal workers to construction workers to mechanics to farmers. You name it, we've got them. If we don't have it, we'll make it for you. Okay, so there's nothing better than going and say, listen, I work with a company that strictly focuses on dental hygienists, as an example, and you can show them the brochure, and it's set up specifically for them. It's going to do nothing but increase your success.
Okay, and one more question is, which states can this be sold in?
This can be sold in every state but New York. We are in the process of getting our certificate there. We're not quite there yet. And Vermont, but every other state we can make offers on.
Okay. Well, I think those are all the questions that have come in. I think I've covered everything. Again, our number here is 800-926-8875. You all have my email, obviously, because you got the webinar invite. So I want to thank everybody for joining us today. And again, just don't be afraid to ask the question. We work as your back office. We're here to help you. So again, just don't be afraid to ask the questions to your clients, and give us a call for quotes and any marketing materials that you need. And thank you, Todd, so much. Great job.
Yes. Thank you for your time. I appreciate it. Have a great day, everybody.
All right. Bye-bye.